Hello and welcome to HW News for the business headlines with me, Ali Azhar. These are troubling times for the world's best-selling commercial aircraft, the Boeing 737 series. With two crashes claiming close to 350 lives in the span of little over 4 months, the Boeing 737's credibility and its previously sound safety record is under the microscope. The first crash was on October 29th of last year, when Indonesian discount carrier Lion Air crashed 13 minutes after takeoff from Jakarta, killing all 189 on board. The second was a Nairobi-bound Ethiopian Airlines flight that took off from Addis Ababa and crashed 6 minutes after takeoff on Sunday, killing all 157 people on board, including 4 Indians. As a reaction to Sunday's accident, precautionary measures were taken by a few countries such as China, Ethiopia, Indonesia, Singapore, Mexico, and Argentina, which grounded all Boeing aircrafts operating in their respective countries. The United States and India, however, were among those that are taking stock of the situation and assessing design and safety flaws before taking a final call on grounding the aircrafts. One possible reason for India's forbearance may be the fact that a combination of high fuel prices, problems with Jet Airways, and runway work at Mumbai airport, combined with the grounding of these aircrafts, may be too much for the aviation industry to handle all at once. Boeing's 737 MAX model has 4 variants and is the fastest selling airplane in the company's history, accumulating nearly 4,700 orders from more than 100 customers worldwide. They witnessed a robust demand globally as the manufacturer claimed they would bring down fuel cost of airlines by 15%, increase its range by 19%, and reduce its engineering and maintenance cost by another 10 to 15%. As the 737 MAX model, which is the model involved in both recent air crashes, generates almost 1/3 of the company's operating profit, it is a big reputational blow to Boeing, which delivered more than 250 MAX planes last year and is ramping up production to fulfill 5,000 orders. The plane is sold out till 2023. Following the crash, shares of Boeing sank 8.8% to $385.50 in early US trading, but managed to recover. Its closest rival, Europe's Airbus A320, is ahead in the race at present, and will be watching these developments very closely. India's 2 biggest airlines, SpiceJet and Jet Airways, have so far taken delivery of a total of 18 Boeing 737 MAX 8 airplanes, with 13 of those forming part of SpiceJet's fleet, and the remaining 5 are part of Jet Airways lineup. However, all 5 of Jet Airways aircrafts have been grounded by lessors for non-payment of dues. What is interesting to note is that Jet Airways over the last 3 to 4 years have placed a cumulative order of 225 additional Boeing 737 MAX airplanes yet to be delivered. SpiceJet, on the other hand, has an outstanding order of 155 airplanes with Boeing for its 737 MAX 8 model. Continuing with the airline theme, and that too Jet Airways, founder chairman of the troubled airline operator Naresh Goyal, via a letter directed to its strategic partner Etihad Airways CEO Tony Douglas, explained Jet's very precarious financial position, including the fact that it has 50 aircrafts of its fleet grounded due to non-payment of dues to lessors, and has requested an urgent funding from the Abu Dhabi headquartered airline of 750 crore rupees. Another separate development had Jet Airways on March 11th default on repayment of a foreign loan due to shortage of capital. In addition to this, salaries of many employees and dues to vendors have also been delayed. Jet Airways has a debt burden of more than 8,000 crores, and with a repayment of 1,700 crore rupees due by March end, Naresh Goyal is in the midst of negotiating a resolution plan. It is learned that under the SBI-led bank resolution plan to rescue Jet, a total fund infusion of at least 4,200 crore rupees would be seen. A new investor would inject between 1,600 and 1,900 crore rupees for a stake of around 20% in the airline, and the Goyal Group's stake in Jet Airways would fall from 51% to a mere 17.1%. The consortium of lenders led by SBI that had converted its debt into equity will pump in an additional 1,000 crores to take its shareholding to 30%. Etihad will also infuse between 1,600 and 1,900 crore rupees to raise its shareholding to 24.9%. Goyal will also immediately step down as chairman of the company once he ceases to be a majority shareholder. However, he may be eligible to appoint 2 nominees to the 12-member strong board. In addition, his son Nivan Goyal could be considered for an executive post on the board. The exact details will be known once the deal is finalized. Thank you for watching HW News. This is me signing off. Have a great day.
If you like this video, please share it, and we would love to hear your comments in the comments section down here. Also, please do like our Facebook page and follow us on Twitter to get minute-to-minute news updates. For more such shows and videos, well, subscribe to our YouTube channel.